Listen up, homeowners. You're about to hear a lot about refinancing. Mortgage rates have been trending down, and the expectation is that they are going to continue going down. The information that I've read is that two, maybe three rate cuts by the Fed is expected by the end of this year. Now, it's important to note that Fed rate cuts do not automatically mean lower mortgage rates. In fact, oftentimes I've seen on Monday the Fed will lower the rates, and on Tuesday the mortgage rates are a little bit higher. So the mortgage rates are not determined by the Fed; they're determined by the bond market, which often reacts to what the Fed does and what the Fed says. And so, generally speaking, it's true though that as the Fed lowers the Fed rates, you'll wind up seeing the mortgage rates follow, if not immediately, sometime shortly thereafter. So I want to bring some thoughts to you whenever you start considering refinancing. Mortgage professionals are going to be like, they're going to see it like chum in the water, and slow down, take a moment, and decide, when do you want to refinance? At what point? Rates have they've come down a little bit. They're going to come down some more, and maybe even some more if you believe that we have three rate cuts coming by the Fed by the end of the year. So basically, you're going to look at two different types of refinances, or two different reasons to refinance. One is going to be the rate term refinance, where simply you're looking at a lower rate to lower your monthly payment. And at that point, you want to look at what's the cost, what's the savings. Divide one into the other and see how long it's going to take you to recapture your investment. And you want to be mindful of, where do we think the rates are going to get to? Because what I don't think you want to do is refinance now. Oh, rates got a little bit better, let's refinance again. No one knows exactly what the future holds. So I've seen people miss out on refinancing too, because wherever the rate got to, oh, it's going to get lower. Oh, it's going to get lower. At some point, it's not going to get any lower, and it goes back up. And one of the things I've always told people, and I think it's true, my experience bears this out, that rates go up a whole lot faster than they go down. So when they get to the bottom, when we see the lowest mortgage rate, oftentimes we see a jump pretty quickly up from that bottom. The second type of refinance is going to be the cash out, debt consolidation, pulling money out. So there's a lot of pent up equity. The price of houses have gone up quite a bit since COVID, when we saw the boom and the feeding frenzy and the market just skyrocket at that time. There's a lot of equity built up in people's homes. And so we've had conversations with people about maybe taking some of that equity out, rolling in some of the consumer debt that they have, high interest rate credit cards, car payments. Sometimes you can lower the monthly expenses, increase your monthly savings. If we can save you $500, $1,000, $1,500 a month, for a lot of people, that's a lot of money, and that's a lot of breathing room, right? It can change the quality of their life. And so when you're going through this conversation, you're talking to your lender, one of the things that you may want to look at is, do I want to do a debt consolidation? I'm going to get a lot of pushback. Hey, you don't want to roll consumer debt into a 30-year mortgage. And that's nice and easy to be able to say. But if you're getting that weight, if you're getting that stress off of your shoulders, what's happening with you is important, not what happens to other people. And we and most mortgage lenders that I know are here to help people in their situations. And so, and again, you're going to have some that, hey, refinance so I can get another loan. That's not going to be the norm. That's not going to be most of the people that I know in the industries. And so as the conversation picks up and you start hearing more and more about refinancing, I just wanted to give you some things to think about, some things to consider, and hopefully put you in a position to make the right decision for you and your family going forward in terms of dealing with your mortgage in the future.